Rajesh Agarwal of Eastern Financiers and Gajendra Kothari of Erica Wealth Management are our experts for the day. Good afternoon, gentlemen. Thanks very much for speaking with us. Our first caller is on the line with us already. Bhagwan Das Kashyap calls in from Faridabad. Hi, sir. What's your question?
मेरा क्वेश्चन है एक्चुअली मस्टेक के ऊपर. मस्टेक मैंने 262 पे लिया था 100 शेयर, तो मैं उसके बारे में जानना चाहता हूँ. अभी मैं प्रॉफिट बुक करूँ क्या अभी या होल्ड करूँ? ओके,
आप नॉर्मली लॉन्ग टर्म इन्वेस्टर हैं?
अब वैसे तो मैं लॉन्ग टर्म इन्वेस्टर हूँ, 18 साल से इसमें हूँ शेयर मार्केट में, और काफी शेयर मेरे पास 4-5 साल.
आप हर शेयर को कितने टाइम तक रखते हैं?
जैसे अगर ज्यादा प्रॉफिट होता है तो निकाल देता हूँ, नहीं तो फिर मैं 1-1.5 साल के लिए भी रखता हूँ अगर कहीं प्रॉफिट नहीं मिलता है तो.
ओके, राजेश, व्हाट्स योर एडवाइस फॉर हिम?
Sumera, I think unless he is in requirement of funds, I think he should continue with his holdings, because since the restructuring has been announced in Mastek, where they are going to demerge their insurance business and list that into domestic market, and the subsidiary of that insurance business is going to be listed in overseas market also, the stock has seen quite a good run up. But still it's trading at a discount to its peer group stocks, and I think there is enough room for the stock going up. One can continue holding with the stock unless one is in requirement of cash, the target being 450 rupees the next 6 months. So I would say stay put with the stock. The IT services business is going to do well. Even the insurance business is going to be giving good returns. So both of them, after the demerger the stock is going to be re-rated. The combined stock price should be around 450 rupees. So stay put with the stock. Even for new investors who are watching our show, can go ahead and buy in correction of around maybe at around levels of 350 rupees, 355 rupees.
All right then, so stay invested is the call coming in on Mastek. That's Rajesh's advice as we speak. But pull up the Nifty. The Nifty is moving to the high point of the day. And one stock that has moved well in the last few minutes is Cipla. That stock, in fact, has moved to the high point of the day. So good 120-point rally is what we're seeing. Let's hope that this sustains. We're even at 8,150. I guess if we can cross that, it'll be on a closing basis, it'll be a psychological positive for the bulls. But back to our callers. Vivek calls us from Patna, and I think he has a query on Ashok Leyland. Hi, Vivek.
Yes, sir. Hello.
Hi, how can we help you?
Sir, we want to invest 50,000 in Ashok Leyland.
Okay.
इस समय इस पे इन्वेस्ट करना ठीक रहेगा कि अभी होल्ड इस पे थोड़ा सा गिरने के बाद इसको खरीदा जाए? ये थोड़ा सा जानकारी चाहते हैं और लॉन्ग टर्म.
Right, Vivek. So you want to get into Ashok Leyland? कितना समय के लिए आप होल्ड करने का?
वो 8 से 9 मंथ, 1 साल के लिए होल्ड.
1 साल के लिए.
जी.
All right. Rajesh, let's come across to you. He's looking to invest around 50,000 rupees. He wants to buy Ashok Leyland. That stock, I remember just around a year and a half or 2 years ago, it was at 15 bucks. Currently, it's at 50 bucks. Is it a good time to put 50,000 rupees into that stock and hold it for a year, or do you think it's peaked out?
See, Nigel, although the stock has done very well, not only on market cap parameters, but also operationally, the numbers have seen a turnaround. Quarter on quarter, sales have gone up. Even international business in Bangladesh and Sri Lanka is doing well. Going forward also, with hopes of interest rate cuts and economy reviving, we think that the heavy commercial vehicles business should do well. Even at this point of time, the medium and heavy commercial business have seen a markup. But still, for new investments, I won't recommend Ashok Leyland. For existing investor, one can continue holding with a price target of maybe 55, 56. But for new investor who is willing to put new money into auto pack, Tata Motors or a Bajaj Auto would be a better pick.
Okay. विवेक जी, आपके लिए राय यही है कि अगर आप न्यू इन्वेस्टर हैं, आप अभी इन्वेस्ट करना शुरू किए हैं, तो आपके लिए अशोक लेलैंड सबसे अच्छा बेट नहीं रहेगा. आप टाटा मोटर्स से शुरू करिए. जो आपका ये 50,000 रुपीस है, वो आप उसमें इन्वेस्ट करने की सोचिए. Next up, we have Manoj Saxena, who writes to us from Pune. He is planning to invest in an endowment plan, mainly because of the maturity benefits, but because he says it's a little bit expensive, he wants to know whether it's also going to have a costlier premium, and also wants a suggestion on which endowment plan he should go in for. Gajendra, what's your advice on this? Would you advise an endowment plan at all, or would your advice be that he can perhaps look at taking a term plan?
Yeah, normally, Sumaira, we don't recommend to go for an endowment plan because an endowment plan is a kind of a debt plan, which is normally for a very long term. And in an endowment plan, normally your investment and insurance is combined together. And so what happens is that you're neither properly insured and you're not adequately invested also. Most of the investment in an endowment fund goes into a debt kind of products like government securities bonds, and over a 20-year, 30-year doesn't make sense to invest your money into debt products which can barely give you 5 to 6% return over long term. To Manoj, I would recommend to go for a pure term plan, because at his age, which is 35, a term plan of 1 crore cover would cost him barely around 11,500 rupees per annum, vis-a-vis an endowment plan which would cost him roughly 2,72,000 rupees for the same 1 crore cover. He would be much better off by going for a term plan and investing the remaining amount of money in other vehicles, maybe like PPF if he is a very conservative investor, or a fixed deposit, or he can go for a mutual funds also. Since this is a long-term money for 10-20 years, I would recommend him to, go for equity mutual funds, which can give you around 14 to 15% over 10 to 15-year horizon. So, he should keep his investment and insurance separate. Do not mix it together.
All right, let's go to our next SMS that we received. Shashank Tripathi writes to us from Mumbai. He wants to invest in Birla Sun Life SIP plan. He wants to know whether this will be treated as a direct investment. If not, is it possible to convert into one? And also, he wants to go in for an ELSS or some other scheme. His time horizon is that he's a long-term investor. Gajendra, you heard that query. What would you advise Mr. Tripathi?
Yeah, to Mr. Tripathi, I would advise, because he has mentioned that he wants to go for an SIP and this is a mutual fund. All mutual funds offer this facility of SIP investing, wherein you can invest every month a little amount, which goes a long way. Now, since you mentioned your time horizon is very long, I can recommend you a couple of funds. The first one would be Birla Sun Life 95 Balance Fund. Since you have not early invested in mutual funds, then this can be a good fund to start with. Over a longer period, maybe 5 to 10 years horizon, you can expect in around 12 to 14% kind of return post-tax in this kind of fund. In this fund, 65% of the money is invested in equity and the remaining 35% is invested in debt instruments. So this is a good hybrid kind of fund which has a moderate risk. If you are willing to take a little more risk and has, again, as I said, 10-year plus horizon, then you can go for a diversified equity fund wherein your money is invested in maybe top 50 or 100 companies of India, blue chip stocks of India. Therein, one of the names which I can recommend is Birla Sun Life Frontline Equity Fund, which has a long-term track record. And again, here you can expect around 15 to 17% per annum on an average return over a 10-year horizon. Now, you also mentioned that you wanted to go for ELSS scheme. So ELSS is nothing but tax-saving mutual funds, which Government of India allows under Section 80C, and this year the limit has been hiked to 1,50,000. Now, there are two things to it. If you are a high-risk investor and you expect anything upwards of 10-12% return, then ELSS can be a good investment, because in the shorter term ELSS can be a little volatile, but if you hold it for another 5-10 years, then the history says that you get consistent upwards of 10-12% return. If you want a very safe kind of instrument, then PPF is the best avenue, which currently gives you 8.7% return per annum. Now, you also ask about whether to go for a direct plan or a regular plan. Now, in mutual funds, in the last 2 years, SEBI has given two options to the investors. One is a regular plan, another is a direct plan. In the regular plan, you are charged a little higher fees, the expense ratios, because your agent or advisor is involved in the process. And in the direct plan, you go directly to the mutual fund and you buy the mutual fund scheme. The difference between the two is around somewhere between 0.5% to 1% per annum in terms of the fee structure. Now, I would recommend if you know about how to invest in mutual funds and you know about the complexities, then you can go direct and you can save that fees. But if you do not have time or do not have knowledge, then I would recommend you to go through an advisor, because in the long term that can be more beneficial. However, you always have the option to switch between any of the two whenever you want. At the time of filling up an application form, you can mention that whether you want to go to direct or you want to go through the regular plan. I hope this answers.
Kamlesh Modi has called us from Ahmedabad. Hi Kamlesh, what's your question?
मैडम हेलो
बताइए आपका क्या सवाल है?
मैडम मैंने 2010 में टोरेंट पावर को खरीदे थे 350 में 500 से.
ओके,
तो अब मैं क्या करूँ, कुछ रखूँ अब बेच दूँ?
310 में या 350 में?
350 में खरीदे 2010 में जून महीने.
Oh, Rajesh, the stock price is almost halved, from where he bought it. What's the advice for him now? I mean, for a retail investor, should you advise that he just book his losses and, move to a higher yielding stock or a sector?
See, Sumera, I'm sorry, he has no other option but to book his losses, but still I would suggest stay for some more time. You have already waited for around 4 years. Stay for some more time, maybe in the next 6 months or so you will get a price target of around 200, 210. At that point of time you have to book your losses, because I don't find any reason to believe that the stock is going to its cost price also. Forget about the interest or the profit margins. This company supplies power to Ahmedabad, Gujarat and Gandhinagar. The numbers have been pretty decent, and going forward also I think after that gas price issue being resolved, gas pooling issue being resolved in the near future, I think things are going to improve, but still 210 would be a prudent target to get out of this stock.
Alright then, watch for levels of around 210. Your cost price is far away. That's unfortunate, but look for the best levels, maybe 210 approximately. That's good level. Book out of there, come back and fight another day. But let's get to our next caller. Deepak Sharma calls us from Gurgaon. He has some investments in PC Jewellers. Hi Deepak.
Hello.
Hi.
हेलो सर, मैं दीपक शर्मा बोल रहा हूँ गुड़गांव से.
यस दीपक.
सर मैंने पीसी ज्वेलर खरीदे हैं 276 में, तो अभी सर मुझे कितने टाइम तक उसको होल्ड कर सकता हूँ?
दीपक जी, आप 1 साल के लिए रुक सकते हैं?
सर 1 साल नहीं, मेरा 3 महीने का व्यू है सर, 3 से 4 महीने का व्यू है मेरा.
Alright Deepak ji, Rajesh, what do you think? You're an investor. I thought it was going to be very good for him because the stock is up 17%. Unfortunately, his buy price is a good $70 away from the current market price. So what should he do? He only wants to wait for 3 months. Should he book out? Should he wait? What do you think?
Nigel, I think in the next 3 months one can expect a target of 225, 230 in the stock, because the numbers have not been quite exciting. If you see, in the last quarter numbers were pretty muted because of higher expenses and higher tax incidents. The tax exemptions which the company used to get is being gradually phased out. The domestic market, although doing well, but exports have not done anything. And even on the brand side, I would prefer being with brand leaders like Titan or a Gitanjali Gems rather than being with PC Jewellers. So I would suggest book your losses around 225, 230 rupees. And somebody wants to be in this sector, Titan would be the best pick.
Okay, Rajesh, what's your take on the new listing today, Innovative Design?
I think one should wait for the numbers to come out for the next quarter or so, because although the company is doing well, it's demerged from Polaris and is doing well, but still for standalone numbers to come out would be a prudent time to take a decision on an investment call. But at this point of time, I think one should hold on. Maybe 10% from the current market price is quite possible in next week or so. So stay put with that. Book your profit, get out of after 10-15% jump, and wait for next quarter numbers to come out.
Alright then, that's the view coming in on that particular counter. But take a look at some of these stocks. Let's pull up something like a Punjra. That stock in fact has fallen off the cliff just in the last few minutes. If you can pull up that particular counter, even India Cements is seeing some profit booking. So there is some profit booking on select stocks, though the Nifty is holding with very, very good gains at this point of time. But let's go to our next query. Triloj writes to us from Bangalore. He is 55 years old and almost on the brink of retiring. He has invested a lump sum amount in LIC's Jeevan Akshay plan. He has paid his annuity on a half-yearly basis, and he wants to know how much longer should he stay invested in this plan and when would be the ideal time to retire. All right, then, Gajendra, that's the query to you. Here's someone 55 years old. You heard his query. What should he do?
Yeah, so Trilogy, I think what plan you bought is an annuity plan. In an annuity plan, you have to pay a one-time lump sum amount, and then for forever in your retirement, you get a monthly or a half-yearly or a yearly pension coming to your bank account. Now, since you've already purchased this annuity, this is an immediate annuity plan, wherein immediately after purchasing, you start getting annuity. Unfortunately, annuity products have not done too great in India, and the returns from these kind of products are in the range of 6 to 7%, and that too taxable. So every month the pension which you're getting is added to your income, and you're taxed according in whichever tax bracket you fall into. Now, once you bought this plan, there is no surrender value, or there's no way to stop this plan. This lasts as long as you've chosen whatever option. In this case, you've chosen to option to receive penalty for.
Right. All right, and Gajendra, I'm sorry I have to interrupt you there. We're actually all out of time. But before we wrap up, Rajesh, any disclosures?
The stocks which we have discussed in this show today, I don't have any holdings in that. Our clients or our company might be holding any investment or trading positions.
All right, on that note, Rajesh and Gajendra, appreciate your time this afternoon. Thank you very much for advising our viewers.